Hello. Welcome back to the Sweet Spark podcast. We are talking tax strategies today with Stephanie. I am Danielle McCormick. I am one of the co-founders of Sweet Solutions. And Miss Stephanie, will you introduce yourself, ma'am?
I am Stephanie Georgakopoulos, the other co-founder of Sweet Solutions and the co-host of this phenomenal podcast.
Yes. Yes. So last week we were talking about the financial independence number and why that's important, how you calculate it, what that means to you, and how you start your journey getting to that number so you can start to set some goals for your exit for your business. And again, if you want to try to find that form, you can go to our website that is at sweetsolutions.biz, B-I-Z, and that is going to help you calculate what your financial independence number is and find some materials there. So we're carrying over from last week with the financial independence number and now moving into some of those tax strategies that will help you with just your overall tax burden and whatnot. So Stephanie is going to take us through, we've got about our top 10 that we typically talk about to keep this from turning into a total dissertation and a snooze. We're going to go through our favorite 4, but on our website also you can find some additional information there. Also, we will be posting different reels and whatnot on our Facebook and our Instagram. So you can find it on our social media and get some more information there as well as from our website. Miss Stephanie, please take it away with our favorite 4 tax strategies.
Okay, first off, I love numbers. Not so. Just kidding. When you said that, I cracked up. Yeah, I don't want to make it a dissertation. I picked 4 that I think apply to a lot of situations. So as far as my favorite is because they're applicable to a lot of people and they help a lot of people. The first one is that helps reduce taxes is putting your family to work. So there's a couple ways that we can look at this, but I love it because really, in essence, what you're doing is you are moving income that would have come to you in your higher tax bracket into a lower tax bracket from like the personal side, right? So you're moving it from you maybe to your children, or you're moving it to your elderly parents, somebody that's in a lower tax bracket than you, right? So now that money is still coming into the household. You're able to legally pay less taxes on it because it's flowing through somebody else. I'll look at it from the perspective of having a child, and especially a minor child, come work. Hiring an underage child has some special things because if you pay them less than the standard deduction for the year, obviously your standard deduction changes year by year, right? So check whatever it is for the year. But if you pay them less than that, or like to that, then it zeroes out. So let's say that standard deduction is $15,000, you pay them $15,000. So they file their taxes. Hey, I made $15,000, standard deduction $15,000, 0. Now, not only did you bring it to a low, you brought it to 0.
Okay.
There are methods that you can do like that as well. And then there are also things that you can do. I am obviously very big on the financial planning side too, where you can, yes, pay them and then maybe they pay for their own soccer stuff or things you would have already paid for them. Now they're paying for themselves because it just came through that way. Or because they're working now, we can set up like a kid's IRA and we're able to help save for them for
and
later.
Start growing their own personal wealth then.
That is one great way. There are different and multiple applications, but it's one that I like because again, especially with business owners that we work with, it's very much a family thing. And so it is a way to help with the taxes, legally minimize taxes, and use it for beneficial things, like I said,
Absolutely. If it's available, using it would be perfect.
Yeah. So that is a good one. And again, your situation may be different, but overall, this is one that we work with a lot because of how the structure of the small businesses that we work with are set up. It is one of our favorites because it is so versatile. And the second one that I wanted to bring up today was cost segregation. So this is another one that really helps people out. So what it means is that you literally segregate, you separate the different types of costs into different categories, able to be depreciated at different rates. So if you were to lump sum them all together, let's say you start your business, you get your location, you have to do all of this rehabbing. And if you just kind of like lump sum it all together, let's say, for example, okay, now you've got a 30-year depreciation schedule. Everything is for the 30 years. The
Okay.
thing about depreciation is depending on what it is, there's different schedules for it, for different amount of years that you can depreciate it out. So maybe you want your cabinet separated on a different line so that you can depreciate it in a shorter time. Shorter time depreciation means more depreciation in the year that you're filing, lower taxes.
Ah, okay. That makes sense.
So
Yep.
if you just
Yep.
did it
That
all
totally
together,
makes
maybe
sense.
you get this
So
big.
by separating out, you don't have to run the full 30.
So let's say, for example, and this is just for like super easy math. This is not a schedule. Okay. But let's say it's the
Sure.
difference
Yeah.
of it's the difference of so 100,000 over 10 years, 8,333 per year, or 100,000 over 2 years, 50,000 each year. So if you're shortening the amount of time you get to
Ah, okay.
depreciate, it makes it a larger number in the year, and you're like, oh, okay, so now I get to subtract 50,000 instead of 8,333. Those are not, yeah, I just want to make
That's awesome.
this abundantly clear to anyone listening. They're going to go to their CPA and be like, stop what you said. That was just to make it
Yes.
easily to understand.
Yes.
Okay.
This is an example only,
Yeah.
not easy bake recipe tax advice.
Yeah. So go ahead and put my little legal disclosure in there. I just wanted to make it easy for just like
Exactly.
that concept. You're driving, you're listening to the concept and it makes
Hmm.
sense. So that's another big one though, is like being able to plan out when you're going to be able to put your depreciation in. And so how can you augment the amount of tax savings by doing so? So cost segregation, and some people are like, why wouldn't it be done that way? And it just goes to how much time and effort you put into separating, classifying, and about 80% of CPAs are tax preparers. A tax preparer just files, they like take your information, maybe clean it up a little bit, and then they're like, oh yeah, okay, and they put it into the boxes.
I think that's super important to really call out because so many people don't realize that their tax person, their CPA, is just preparing their taxes, is not necessarily helping with additional strategies. That's a different service and potentially even a different practice. So there's a lot of folks that are just like, why didn't my CPA tell me that? Why hasn't my accountant brought that to me? You really need to be looking at tax strategists, not just people that are going to prepare it. Yes, you want to make sure that it's prepared properly, that you're going to get away from any audit or things like that. But to bring in these tax strategies into your overall business and filing, you really needed someone that's going to help you with the strategies themselves and not just how to put it on paper in a
Yeah,
generic way.
like more of a business advisor, a business financial analyst than just the CPA who is working all day long in their business. And especially a lot like tax time, they're just like turning, or I don't know if I
Turning
want
the
to say turning,
crank.
but there's so
Hmm.
many that they're doing. They're not really planning. So you want to really sit with someone who's going to give you a plan. I have one CPA friend who is a tax strategist, and he says to me, and I love it, Stephanie, they should know how much their tax responsibility is before the year starts because there's a plan. There's a
Oh,
strategy.
nice. Yeah,
Yeah.
people don't typically think that. They're like, oh God, it's this guessing game at the end of the year and have absolutely no idea how they're going to shake out if they're over, under. It's always this crapshoot that could end up in going to jail. Yeah, most people have no idea what their tax burden is. So that's really a fantastic and a huge note to make sure our audience knows.
Yeah. And it does kind of segue into the other one is okay, what does it mean, Stephanie, to have a strategy? Like, how would I know if mine is a tax preparer versus tax strategist? One, they're going to tell you what to do during the year. They're not going to be
Mhm.
reactive and saying, okay, it's the end of the year, end of year coming up, give me your stuff. Or even like the monthly, maybe they even go so far as like doing a monthly preparation of a P&L and statement of cash flow in your balance sheet. But are they telling you things like, uh, my next one, which is diversify with oil and gas. So if you have investments in oil and gas opportunities, then you can utilize different tax strategies, and it goes based on like the intangible drilling costs, where you can write off like 100% of that. And for oil and gas companies, that's 60 to 80% of their expenses are IDCs. And in that first year, if you find the opportunity that they make you the general partner, then you're able to write that off. This is a huge benefit. So you're able to let, again, just for math, for funsies, you put 100,000 in, right? 80% for that company's, because each investment's different.
Hmm.
80% is an expense. So now you can write off 100% of that expense, which is 80,000. And that's a huge tax strategy for you by investing in that.
So how accessible, yeah, how accessible is that to the common person that may not have an understanding of oil and gas? Is that something that, again, your tax strategist would help you
No,
navigate how to find
that's
those
a tax.
investments?
No. So that's a completely different job. You have to be
Mm,
licensed to be able to talk about like the specific investment.
okay.
But I'm saying like the CPA would need to tell you to go find someone.
Ah, got it.
It's
Okay.
I'm not saying that your CPA has to be a jack of all trades. We want people
Hmm.
to
Right.
be very focused on what they're doing, but giving you this thing of, hey, this is out there. And then, but it has to be a licensed professional that's going to come and say, these are the terms of this specific one. Very much so in the financial services industry, there's lots of licenses that go with different things because they're being regulated by
Right.
SEC, whatever. But just
Hmm.
overall, like letting you know some different things helps. And then you work with people like us that bring those opportunities forward, but
Right.
no, not necessarily that they have to be the one to actually have that in their back pocket. They'll be like, oh, but I know that it's out there. I can refer you to somebody, et cetera, et cetera. Like they're an asset to you. Great question.
So really you're looking at, again, that tax strategist that can help you access those products and understand what it is that you need to go looking for and or could potentially make those referrals. But again, like you
Mhm.
said, if they're not giving you some of that play by play month over month or even at least an annual operating plan for how you want to employ those strategies at the beginning of the year, then you may actually be putting yourself at a disadvantage, again, trying to get up to, as you scale your business, again, with that attainment of your financial independence number upon exit. So yeah, really, I really appreciate you breaking that down. That makes it so much more digestible for our audience that may be like, what? I can't even spell tax, much less know what tax strategies are. And who knew that I could do oil and gas? Who knew that I could employ my teenager and do more than just fight with them? So I just really appreciate that you're bringing that to a common language that people can really digest and understand, because a lot of taxes are such a black box that nobody really knows how to employ those effectively. And so then when you are looking at trying to scale your business, you have no idea where to turn and everything feels so much more expensive, not realizing that you could be harnessing the power of these different tax breaks to make that leverage internal to your business so you can grow.
Yeah, good point. And you mentioned something that kind of segues into my last favorite. You said
Hmm.
that I mentioned you can employ your teens and not just fight with them.
Yeah.
If you've hired family, right? If you've started to put your family to work, another thing that you could do is invest where you like to travel. And if you have an investment that allows, and of course there's stipulations in every type of tax thing, there's stipulations. I think I really need
Always.
to have a
Yep.
disclaimer about that in this podcast. Is please, if you don't talk to us, talk to a CPA, a licensed person, because
Absolutely.
this don't just take this and run with it. If you're traveling somewhere and you have an investment there, you can write it off. And if your family is working with you, then everybody's trip could be a write-off. Now there's stipulations, how many hours you have
Nice.
to work while you're there, what has to happen while
Of
you
course.
lots of fine print, okay, in that tome of the IRS. But I just wanted to talk about some basic ones to think about and get people's minds moving into, okay, there are things out there. What I love to hate about the tax code is that it really is written to propel, no, that's not the word, to incentivize people to do what the government wants, right? They will give so
Hmm.
many incentives to do things that they need for for the country. Obviously, job creation, right? Just owning a business, you're creating jobs. The government wants that. They're going to give you lots of tax breaks. There's so many incentives. You just have
Hmm.
to know what they are. Also, affordable housing. The government wants that. So if you do something like that, there are so many tax breaks. So really, it's
Absolutely.
what does our country need? They will write a tax break to get people to do it. It makes sense if you think
Hmm.
about it that way.
Well,
Instead
yeah,
of
you're
like,
creating the rules to and guiding the left and right limits for people to actually do what you want them to do. So might as well take advantage of that, especially if you're already playing the game.
Exactly. So those are my four that I most frequently am able to help people utilize and put in. But like you said, we're gonna make some fun reels. It's gonna be so out of my comfort zone, but we're gonna make some fun reels of our top 10. Put them on our Facebook page, Sweet Solutions. Follow us if you have not already, and you'll be able to, they're gonna be short 1-2 minute snippets of each of our top 10. So it'll be fun.
Perfect.
So follow.
Yep. And then you'll also be able to find some of those materials on our website. Again, that is Suite, SUITE, solutions.biz. So again, you can find your financial independence number on our website, as well as some of these different tax strategies and some guidance. Again, this is to give you some understanding and information on that. If you decide to go with us, that's great. If you don't, please talk to a licensed professional so that you don't get yourself into some hot water with the government, because nobody wants that. And you want taxes to work for you, not against you. That was really, really helpful, Stephanie. Thank you again for making these things accessible and making it where we can really understand that there are these different, I don't call them loopholes, but these different methods that we can utilize to lower the burden and really make some of that additional revenue work for us so that we can continue to scale in pursuit of that exit and financial retirement number. So thank you again. This is wonderful. Next week, we will be talking about operations, and we're going to move more into my wheelhouse here and start talking about what are the different things that you can do for profit recovery. How is it that we analyze businesses and figure out where you may be bleeding money and where we can contain costs without losing quality. So tune in next week for some more operational talk, again, as we help you scale and get the tips, tricks, and needed information for growing your business so you can ultimately exit. We are your exit experts, and we are here to help you. So thank you again for tuning in, and we will talk to you next week. Bye.
Bye.